Hey everybody, what's going on? In today's video, we're going to be covering a light week for earnings we've got coming up, a big week for Jay Powell and for jobs reports. We've got the beginning of our rally underway, so we're going to see if we can figure out how far it can go. We'll take a look at last week's setups and see if we made any money or not. And spoiler alert, we did. We'll look at some new setups that we've got coming up this week that include JP Morgan, NVDA, and a whole bunch more. Lots of interesting setups coming. So by the way, why don't you go ahead and smash that like button. We put a lot of work into these videos and it really helps us out. And if you're wondering who I am, my name is Kevin D. I've been trading for 25 years. I'm a full-time trader and working through the second level of the Certified Market Technician program. And if you're wondering why we do this, I work at the investor community. I run it and we do these videos every single weekend to keep our members up to date on what's going on in the markets and to highlight fresh opportunities. We have a really cool community of like-minded traders, and members get to see these videos early and also get to take part in live streams and mentor sessions. So come check it out. Check out the link down below in the description because we would really like to have you join us. All right, here's a quick little disclaimer. Everything we do here is for educational purposes only. We are not investment advisors, do not provide investment advice. All trading and investment decisions are done at your own risk. All right, let's do this. So here's what we've got coming up this week for earnings. It's still a lot of names, but they are definitely getting into smaller companies you've never heard of before, and companies that aren't that interesting and that don't move markets. So Monday, maybe people will be interested in Sienna, but I think that after the close, the biggest one, or the most interesting one, is probably Trip.com. The travel business ever since the Rona has been, travel businesses have been all over the place. That'll be interesting. I think one of the most interesting ones, I think Tuesday is actually probably the most interesting day. We've got C Limited on Tuesday before the open. Definitely interested in that one. Dick's Sporting Goods is another one that people will be very interested in. We've been having a lot of retail lately, and Dick's is one of those names that can really move and can sometimes move the market too. Especially because they're releasing earnings in the pre-market. After the close on Tuesday is CrowdStrike, big name for cloud stocks, right? Obviously. So we will be watching this one very closely, and I have a position in this too. Nothing really exciting coming up on Wednesday before the open. After the close on Wednesday, MongoDB, that one's okay, but not super big or anything like that. A big one before the open on Thursday is JD.com, the Chinese large cap company, and some other sort of mid-level, lower level names as well on Thursday that might be interesting. Thursday after the close, I know some people will be interested in Ulta Beauty, and it can move a lot. DocuSign is one that will definitely be interesting, as will Oracle, I think. And then Friday before the open, there's really nothing. As far as the economic calendar goes, on Monday we have factory orders. That's not going to do anything, but it is there. It's about the only data point coming out on Monday. Now on Tuesday, however, this is the twice a year, so this is a rare event. Jay Powell testifies before the Senate Banking Committee. He does that on Tuesday. It's fairly civilized because it's the senator. It's usually fairly civilized. He reads a prepared statement, and then they ask him questions all day long. And that prepared statement is released, I think, as soon as he starts to speak. So this has high potential to move markets. It doesn't always, and it can make the market choppy intraday because somebody might ask him a question out of the blue, and who knows what his answer is going to be, and it could be something that moves markets. So it's kind of boring to sit there and have this on in the background all day long, watching it, waiting for something to happen. But if you're trading, just be aware that we could have sudden, very strong moves in the markets and reversals even. And it's because of this. It's because of Jay Powell testifying. Now, on Wednesday, He testifies before the House Financial Services Committee. That one can be a little more, they tend to ask, oh my, how can I do this without getting political? It's not political. Everybody knows that the people in the House aren't as bright as the ones in the Senate, and they sometimes ask really stupid questions. And you know, you can, I've watched it and I've seen, you know, you can see the frustration on Powell's face sometimes. But yeah, again, same deal, right? Somebody may say something, or Powell may, you know, respond to something in a way that causes the markets to move suddenly. And then also on Wednesday, before the open, we have the JOLTS job openings. And because it's a big week for employment numbers, and this is kind of the first one, this could definitely move the markets around in the pre-market. On Thursday, all we have is unemployment claims, so thankfully that, you know, we'll probably see a bit of a quiet day for the markets on Thursday. And then on Friday, we have non-farm payrolls, and these are really, really important. And you know that the Fed is watching, you know, these jobs numbers very closely. The market is watching these jobs numbers very closely. We want to see a little cooling off in the jobs markets. So normally that wouldn't be good for the economy, which wouldn't be good for the market. But right now, because we're so concerned about inflation and rates and how the Fed is going to respond, a little cooling here would be good. So as you can see, lots of stuff that has a lot of potential to move the markets around. We're going to be looking at some charts in a second. So we're going to be looking at technicals, but here is a lot of fundamental and macro data that can move the markets and help this rally that we're in continue, or put a stop to it and possibly reverse it. So let's move on here. Let's start taking a look at these charts. We'll look at the major indices, of course. We'll look at some international markets. We'll look at important commodities. We'll look at all of the major sectors. We'll look at last week's plays, and we'll look at a whole pile of news. And I think we've got like 6 or 7 names on the new setups list. So yeah, this is going to be really interesting. Got lots of stuff for your watch list here. Okay, so let's move on to that. Bring up a chart of the S&P 500. This is the SPY ETF. And you can see we had 2 really strong days. Really nice rally at the end of the week here. After, you know, a week and a half of just basically moving down, almost without a break. You know, we had the one little bounce day, and I guess, you know, tiny bounce that day, another little bounce that day. But what I think is more interesting here, and I really want to zoom in on this, of course, you know, look and see where this trend line comes from, right? This trend line began over a year ago, you know, on the first trading day of the year, basically. Really important downtrend line. Look where we bounced on Wednesday. We came down into that trend line, and look at where, you know, these two trends interact or intersect, right? We've got the long-term trend line, downtrend line. We have an intermediate term uptrend line. They intersected right there, and the SPY decided to bounce there on Wednesday perfectly to the penny inside that, and also right at the 200-day moving average. And I kind of thought, great. You know, this is a little indecisive. However, we should move up from here. But we gapped down a little bit on Thursday morning. Gapped down below the 200-day moving average, which is a little scary. However, the market instantly reversed on that and said, nope, we're not going to stay below this 200-day moving average for more than a few minutes. And it rallied all day long. And then it gapped up on Friday, and it rallied all day long. Wasn't entirely smooth in here intraday, but it was pretty smooth. It was definitely a change of character, and I mentioned this character in our morning briefing. Let's take a look really quickly intraday on this, and you will see what it is. So here's Friday. We're looking at Friday in a 5-minute candle, and this was very, very smooth. We haven't seen a rally this smooth in the S&P for a little while now. If we go back to Thursday, and you can see where the, you know, I guess if we should back up a little bit. Here we go. We can see more of the week here. We can start, you know, Monday, Tuesday, Wednesday, and you can see how we just had this chop. You know, we'd gap. We have these gap openings, and then we would chop around. We go up and down, and it just couldn't hold on to anything. choppy, choppy, choppy. And, you know, and that's what last week was like too, right? Chop, 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 chop. So then when we get into Thursday here, we gapped down and we almost instantly started moving up. And we moved up pretty smoothly, went sideways for a bit, and then we went up some more. Definitely a real change of character, and especially right here. That's where this sort of change of character confirmed, when this rally got strong and really started to go, and then followed through on Friday. So that's really what we want to see, what we're looking for. If we're going to change our behavior, how we're trading, how we're reacting to the market, and we do need to change, certainly did need to change our behavior starting on Thursday, because we were trading for chop. We were not trading for trend. You know, starting on Thursday, we had to say, hey, you know, this is going to start trending. We need to get in trades and try to stay in those trades rather than get in trades and get out at the first sign of trouble. So change of character here. We change our behavior. Hopefully you reacted to this quickly and changed your behavior as well, because I think this has the potential to continue. But like I said, on Tuesday it's a little sketchy. We would definitely want to be careful. We want to be probably taking some money or taking some money off the table, taking some profits in things towards the end of the day on Monday, or if Monday was to open weak. We definitely want to, we definitely want to be taking some profits there. But I suspect that what we see on Monday is potentially a gap up, and then a move into this strong resistance here. You know, we're getting into this gap. We've got what was a fairly strong resistance level at that is the 406 to 408 area. Should be resistance now. If we go into there and just start moving sideways, that'd be perfectly fine, especially with everything we've got going on this week, and maybe later in the week then break out to the upside and move up to the top of this range here, up in around the 1415 area. That would be nice to see. I think we are going to be range bound, but in a wide range until the next FOMC, which is, I believe, 3 weeks away still. So that's where I think we're going over, the course of the week. Probably up tomorrow and then some maybe choppy sideways for a little bit, for a couple of days anyway. Get some of this important macro stuff behind us. All right, let's take a look at the Qs. Much the same thing going on here. Now, here it really kind of undercut that 200-day moving average in the pre-market on Thursday. But again, once we opened up, that bounced and didn't look back. Now it has moved right into that strong resistance level, the same one that the SPY hasn't really hit yet. I think we can get through this. And I think maybe that, a level we need to watch out for next is a pivot sort of off this 309. Let's get that level on there on the chart. There. Yeah, watch out for that one right there. As we move up, if we move up. Okay, IWM. This had been outperforming for a while. You see, it didn't pull back as much, and you can see the performance, through the week was better in IWM than in SPY or Qs. And then again, really nice move up. Looks like it's got more room to run before it starts to go sideways. Let's look at the volatility index. So maybe a little bit of a warning sign. It's it's nice to see that this has been this is pulling back again after breaking out of this range. We can call that a false breakout now. It's pulled back, but now it's come into the bottom of the range. And every time we've come into the bottom of the range recently, you can see the VIX has shot right back up again, which means that the market is pulling back. So this should be seen as a little bit of a yellow light or a yellow flag here, but like I said, I think we've got another up day, and we don't necessarily, VIX doesn't have to shoot up. The market doesn't have to roll right over again. VIX can just kind of go sideways here. VIX could continue to fall, will continue to fall if the market continues to go up. All right, let's look at our 10-year yield. So this on Thursday, and interesting to see this, gap up so much and hold up while the market was moving up too. So that is quite interesting. And then you can see this 10-year yield came back down on Friday. And it'd be really nice to see this continue to come down because that would be good for our equities. Let's take a look at the dollar index. And you can see that the dollar index is sort of grinding slightly lower. Now this is drawing a bit of a bull flag, which we don't really want to see, and it's doing it right above this long-term uptrend line. So that's not ideal, but at least it's not going up from here. So as you know, when the U.S. dollar is going up, equities are probably coming down, and global equities are probably coming down too, as are most commodities, especially gold. So this is one of the reasons that we want to see this dollar index coming down. It's good for so much stuff when the dollar is weak. So hopefully we can see this continue to come down, and we may get a sudden move in this. If we can break through this long-term uptrend line, we might get a sudden move down into this sort of major support level here at 103.5. Our dollar cost averaging system, all systems are go still. Everything is still very green here. We're still above the moving averages in all of the major indices, so nothing to report there. If you are dollar cost averaging, continue to do so. All right, let's go back to these charts and we'll take a look at ACWI. This is the, if it pulls up, there we go. This is the all world index. This is all stocks throughout the world, and you can see that they had that nice turn up and are getting through all of the moving averages here and above all the moving averages now, so that's nice to see. Definitely outperforming. You can see that this is outperforming S&P 500 quite nicely. Let's take a, so this is the all world X the US, so no US stocks in this one, and again you can see this outperformance. EFA is Europe, developed Far East and Australia, looking very strong here. Really nice outperformance in this, good turn up in this, and you can see this started to turn really ahead of the S&P 500. Didn't bottom out as low as the S&P 500 did, or our US markets. We're at a minor resistance level here. I think we're going to get through that and then start testing some of these levels up here. The 72 level and then this pivot high here at 72.50. Emerging markets, ex-China. So no China in this ETF. And again, you can see how this started to turn ahead of our US markets, and it's looking pretty strong. Now we've come into a 21-day moving average here, and we've got that 50-day just overhead. Not too concerned about that. I think what's going to be a tougher nut to crack maybe is that level right about there in this area. But that's a ways off yet. I mean, that's something that we probably don't hit until the end of the week. FXI is China large cap. And you can see we had this big gap up on Wednesday. I can't remember what the cause of that, but and obviously all those Chinese stocks were obviously gapped up nicely on Wednesday as well. Had a little continuation on Thursday, and then indecisive day on Friday. And being restrained by the 21-day moving average right now. So it'll be interesting to see how this reacts on Monday, as the or Monday morning, as the Chinese markets will be opening shortly. Gold is continuing to grind a little higher, and got through that important 1835-ish, 1840 area, and is holding above it. Looks like it's probably going to go higher, although we've got a little bit of some selling wicks on top of that. The miners, though, are looking stronger, and the miners usually lead gold, and you can see that they've made a nice move here. Silver, not so much. It is, it's coming off these lows, but not as strong as gold. Copper is chopping around, but kind of hanging in here, just below these highs. Still, more or less pacing, moving sideways. This is looking fine, right? What else? Let's move on to crude oil. So crude oil continues to come up off the lows. You can see we swung down, made a higher low, but we're still unable to make higher highs. However, we have broken through that trend line. We are pretty much coming right into this little swing high here, and we're doing it with a pretty strong looking candle. So I think we can expect to see crude oil go higher. But we're into this, or getting very near this major resistance zone. So do they sell it again there? I think we've got a good chance of getting through it this time. We've been, like I said, put in these series of higher lows, and once we get up there, we have just put in a higher high. So maybe this is the time we actually break through here. If we look at some of the other components of our energy complex, we can see that nat gas is continuing its move up, however, moving into a strong resistance area as well. So I think that you can both bulls and bears can make really strong arguments in here for these levels we're coming into. So we'll just have to wait and see how that plays out. But, as you probably know, I'm on the bullish side of this one. And it's good to see bullish action here out of XLRE. Moved strongly off these lows again, bounced right where it had to, and has moved up nicely, but again, into a little bit of resistance. XOP, the oil producers, this bounced nicely. I thought, I really had a feeling that, especially with this move down in here, it was so weak, and it really looked like it just could continue its way down, but it did bounce, and it's been quite strong. Again, trying to get through this downtrend line, which is good to see. So it's had a good move. It probably should rest. Maybe it can make it up to here and then go sideways for a bit. Oil services. These are looking good as well. After breaking down out of this nice base that it had formed, definite sign of weakness there, right? But bounced right off that 100-day moving average, got back up here, retook all these quicker averages too, right? The 10-day moving average, the 21-day moving average, retook the 50 is there as well, and quickly moving into these all-time highs. Because this has moved so far, we don't want to see it blast through there, because if it tries to get through here, tomorrow or even early in the week, I think it turns right around. It's expended a lot of energy. Most important thing that this thing could do right now is base in here. But nice tight base, up nice and high in here, right around this level. That's what we'd like to see. And then it can, after basing in here for a few days or even a couple of weeks, then it can break out of here. And break out of there and hold the breakout. Here's TAN. TAN got back up through its major resistance, so that's good to see. Now, consumer discretionary. We're going to look at all our sectors here. This one was quite messy in here. Broke down through a bit of a support level, but it was caught by the 50-day moving average and 100-day moving average. It had a nice bounce off of there, and it moved right up into the slower moving averages, our 10-day moving average and our 20-day or 21-day moving average. This is a real inflection point, I think, for this. This has really got to make another move higher. I would really like to see this get up above these highs, this little group of highs right here, get up through that resistance line, then maybe start going sideways. But really good to see another up day in this. XLI Industrials. These kind of stealthily broke out to, it's not a new high yet. It's sort of right exactly at that pivot, right? But it did get through these highs here. We've only got a couple of wicks up there to watch out for. But this is a nice move in industrials. Be interesting to see if those go higher. Financials. Now on Thursday, you can see we had been basing here, right? We broke down out of a base, basically. Started basing. We're doing it right on top of the 50-day moving average, so wasn't too concerned about what I was seeing in financials. But on Thursday, let me tell you, this candle here that opened and went down a good chunk of the day, that was not pretty. That was looking like a big red bar on here. But notice how it found support right at this $35 level. A support line that goes way back into, I mean, this is way back into early 2021, so 2 years ago. So where that support level came from. It went there and it caught it and it turned around and it put in this, technically it's a dragonfly doji, which is very similar to a hammer candle, right? And then the following day it followed through on that, and nice big green day. But now again, we've had a really strong day and an indecisive day right into resistance. I think this thing could pull off another day. It could pull off another strong day, and you're going to see. And if it does, we've got a setup for that you probably want to play rather than playing this ETF. We'll get into that setup later. But another strong day out of this brings that setup into play, and probably takes us up into this $37 level up here within a day or two. So interesting things going on in financials. Healthcare. So remember last week, we were quite concerned about this breakdown out of this downward channel. I mean, healthcare had not been looking healthy anyway, and then this acceleration out of there. But this is really now starting to look like a little like capitulation. It's not a classic sort of capitulation pattern, but it is a V, and it is doing it with fairly decent volume. So Wednesday, indecisive day, right at a support level, or right near it anyway, and then the big move up for 2 days. Now, we're right at that trend line. If it's going to fail, it's probably going to do it here. You've got the 10-day moving average there, you've got that trend line there. This would be a good place for it to fail. However, looking at these two candles, this does not look like failure is imminent. It looks like we have another day, and that next day, wouldn't be surprised to see it take us up to this 21-day moving average and the 200-day moving average, which is another place to watch out for. But what's interesting about this is, remember, healthcare is it's got defensive healthcare in it, big medical services, supply companies and that sort of thing in there, and they're the more defensive things. We've also got a lot of risk-on kind of stuff going on in there as well, like your biotech and your pharma. And what's interesting is that it's in biotech, and we'll actually switch to that right now, it's in biotech and pharma is where I'm seeing a lot of breakout kind of setups. And we've got a couple of them to look at later on, but I mean, I've got, on a much wider list, I've probably got 10 or 12 biotech stocks. They're just setting up really nice little breakout patterns that look similar to this. Most of them look a little bit better because they're riding along sort of their 10-day moving average or their 21-day moving average, but putting in a bit of sideways action and looking ready to go. So I suspect, this is going to make a move as well early in the week and get going, or the whole thing just falls apart. All these setups just sort of meet that breakout resistance and just fail is also another possibility. But it's really interesting. It's definitely a space to watch right now over the next few days. All right, so let's take a look at REITs. They've been breaking down a little bit, but they had to turn up on Thursday and Friday with everything else. Staples, another defensive sector. Nice reversal candle there on Wednesday, and little move up in here. And utilities, the most defensive sector of all, and that moved up a little bit. So everything was up on Thursday and Friday. It was definitely an everything kind of rally, and that's really nice to see. Technology sector. Again, put in a bit of a base here, rallied on Thursday and Friday, and communications, pretty much the same thing. But look where, this is important here, right? We've got this major level. We've got that 50-day moving average or 200-day moving average is right in there. We consolidated in that area for a little bit. We tried to gap down, right? Gap down to the lowest it had been since breaking through that level, and it bounced right there and bounced quite strongly. Even on Friday too, got through the 10-day and 21-day moving average as well. So this is good. This is, this is one of the reasons I'm bullish. This is why we think this should go higher, because we are seeing strength in everything. Okay, let's move on to our FAANG. Oh, first we're going to go semiconductors. And I got some plays in semiconductors, and you can probably see why. So let's take a close look at this before we look at those plays in a minute. We'll just kind of zoom in here. Look, we got we got a higher low right here, and then we broke out. We had 1, 2, 3, 4 days. Couldn't get through this level at around 242.50. And then Friday we broke through that level, and we're going to attack this gap right here. I think this is going to continue higher, and that's why I was looking for plays in semiconductors. Okay, Meta. I've been warning for at least a week and a half, maybe even 2 weeks, on the short that we had pointed out, that take some money off of this thing, take money off the table, maybe even consider getting all the way out of it. When it bounced here on this 21-day moving average is when I, or at least the decline stopped there. I said, watch out. This could bounce here, and it could bounce strongly. So hopefully you. You took my not investment advice and lightened up on those positions, or exited completely and didn't get hurt here on Friday. If you should not be short anymore in this. This is showing some good strength, like we knew that Meta can, right? I mean, you can beat Meta down, but it will come back. It'll get off the mat and get going. And if you're short, it can hurt you. Okay, Apple. So sort of some relative weakness out of Apple, I would say, over the last week. And it was a little slow to get off the mat on Thursday, but nice big gap up here on Friday, and continuation, finishing on the highs, looking strong, looking like it wants to go back up to the top of this range. Either this level, here, let me get a little line on that. This level here, you can see there's kind of a cluster of highs in here. That could be a place where a rally stalls out. Amazon. All right, even Amazon, the weakest of the bunch in my opinion, trying to bounce here, a little reversal candle on Thursday, and trying to take back some of these levels. It is right at, you can see there's a whole bunch of highs here. It's important for this to level up here, get through this, get through these moving averages, and get above this 50% retracement of that original rally. Get back up above that level, then it can start going sideways up here. I would feel a lot better about it consolidating in this area rather than consolidating in this area. Netflix, I'm worried about Netflix. Where's Thursday and Friday's rally in this thing? It's not there. That is relative weakness. When everything else, have you seen two candles that look like that from anything we've looked at yet? The answer is no. So I'm a little scared for this, and I'm kind of like, if we break down below here, I would short this thing, especially if the market is selling. Let's say I'm wrong about all my bullishness for Monday, and the market's actually weak. I think we're going to see real weakness out of Netflix. Now, I'm not thrilled about this setup, but I don't know, maybe I should be, and I'm starting to actually talk myself into a short here. I don't want to be shorting it though if the market is bullish. If everything else is going up, I don't want to be shorting Netflix. It's not until the market starts to roll over a little bit that we get a little bit of pullback in the market and some of the other FAANGs. Then I want to be short Netflix, because I think that will be the weakest of the bunch. Google. Google, after being super weak, is really starting to show some strength here now. It bounced earlier than most other things, and it had that really strong day on Thursday, and it followed through on Friday. Now, it's coming to a little bit of a cluster of resistance here with some moving averages and fib retracements and everything, but I think we can get up through that and get up to the next level. Microsoft, again, same sort of thing that we've been seeing. Good to see it bounce there like it had to do. So all good there in Microsoft. Tesla, another one with sort of relative weakness. It had the bounce on Thursday and Friday, but that big gap down after Investor Day. Investor Day did not impress. So that's what all this weakness was from. But it's taken it back pretty quick here, right? That's a big gap down there. We should actually draw that gap in because we're only kind of halfway filled on it, right? Actually, maybe a little more than halfway. So where's our gap start? Our gap starts here. Look at, the gap was all the way down to there. All the way down to that previous gap that continues to remain unfilled. But that's where it found support on Thursday, and it moved up nicely. But yeah, you can see there's still a little bit of work to do here on this. I don't know. I don't really have an opinion here. Tesla is right in the middle of the range. I'm not going to play anything in the middle of the range. Give me to the extremities of the range, and then we can talk. Okay, so that is it for the market and the stocks we always look at. Let's take a look at last week's setups, or the setups that we've been in for a while, and I'm talking like HIMs we've been in for a while. Okay, so we had this nice big gap up on earnings, but it gave it back pretty quick. And what happened here is, so here's our earnings gap. Obviously, we can probably we don't need to see this gap anymore because that has been pretty much completely filled. So we got the big gap, the gap and go. The following day, it went up, got a little indecisive. So this was definitely a warning sign. This was a good place to take some profit off. And I did. I closed out a couple of my calls. I'm pretty sure I think it was here. I think it was here on Wednesday when I closed out a couple of my calls. And then was it overnight or before the open? We got some Form 4s, I think it is, showing that the CEO had sold some stock. Now, that concerned a lot of people. I think this is an overreaction, and because if you look at it, the CEO exercised options and then sold them. And this is something he does every quarter like clockwork. There was nothing unusual, and actually his selling was smaller in size this time than previous quarters. So I know it concerned the market, so it should concern us. But I think this reaction to it's overdone. Maybe there's something else going on here that I'm not aware of. And if you know, let me know in the comments. So we've got a big gap down here, and we should mark in that gap. Because we came from here down to here, and we're barely even closing it off. And then the following day, Friday, not so great either. Although we did gap up and we kind of held it. There was some choppy action in there when the rest of the market was going up. So this is a little bit scary, but we've seen this before out of HIMs. It does make big moves, and then it pulls back a little bit, and then it grinds higher again. So I'm still bullish here. But I'm being cautious, and I've got a level, a break below this pivot here. I'm going to get rid of some more calls, but I do want to be in this long term. I'd like to hold some of these calls into expiration. So watching that area there, we've kind of got to watch the 950 and the $9 level. If this starts breaking through these levels, and especially here, what's that, $9, that should be a fairly strong support level. In fact, I'm going to pull this down a little bit here, right into that $9 level, or close enough. A breakthrough here, I start to get really worried because we're probably coming quickly down into this closing this gap in around 950 to 940. But then we should start finding some support there. So yeah, you can definitely make a bearish case here for a fairly quick move of a couple of dollars. But I don't think that's what we're going to see. I think either we've got some sideways ahead. If the market behaves, we may pull up on a way out of here. But probably more likely a couple more sideways days, work off some of this negative sentiment, and then we can start moving up again. NVT, Nvent Electric. This one hasn't broken out yet. We've been watching this for a little while, right? Or actually, we started watching it right here. I know some people got in and played this breakout here, and that's great. And it looks like it's setting up quite nicely for another breakout. So let's go way back into the past and see, you know, what does that do for us? Well, we're at all-time highs. So, you know, there are no natural sellers above. And that's why you can get some of these really strong moves. When you've got no natural sellers up there, well, it just goes up and it can hold. So I want to be a buyer above this level, obviously, but I also want to be cautious, you know, because the market has moved quite a bit in a couple of days. And we are, you know, expecting the market to come into resistance and have some volatility. I want to be really cautious on buying any breakouts right now. So if I buy a breakout here, the no-brainer stop is below the low of Friday, but I think that what I would probably do is have a stop below the low of the breakout day. That's where I'm going to want my stop. If I lose on it, I don't want to lose much. But this could, it is setting up nicely here. I like the look of this. WYNN, this is going to come off the watch list now. So this kind of faked around a little bit. You know, there was the breakout here, faked us out. Then it tried to, a little fake out to the downside out of that range. And then it started to move up, and it moved up quite nicely. So if you got in this, congratulations. I didn't, unfortunately. I didn't trust it after the little fake out here, but I guess I should have, right? Because this was a really nice move, and it's also broken through that long-term trend. So this is nice strength here. I don't see any slowing momentum here yet, but you will want to, as soon as, if you're in it, as soon as you start to see that slowing momentum, you probably want to take a little bit off of this, because this rally is now 4 days long. So it is due to be taking a small piece off. And don't be surprised if you see a pullback back into this trend line and then another move away from that. And that'd be cool for those of us who couldn't or didn't get in there, because maybe we get another setup there that we can play. Roblox. So this one, we got to look closely at this guy here. We had talked about how, coming down into the 200-day moving average and these hammer candles, and then the consolidation got nice and tight. And then obviously, that's where you play the breakout. You play the breakout at one of these levels, right? Halfway into this green candle. So, it would have felt like you were chasing that intraday, but it was the right thing to do because it followed through on Friday. Watch out for pivot resistance up here if you're in this. Copart, sorry. This was a little bit of a messy breakout. It probably because it kind of broke out early, right? And it wasn't getting help from the market. But it did break out. It pulled back in. I bought this breakout and sold this the same day when it started pulling back in for a tiny little profit. Bounced here nicely though, and kind of tried again, but I don't like this. This breakout is too indecisive. I'm going to take this. I'm going to take this off the list. The big play of the week was Journey Energy. So we were talking about this right here. So this was the previous Friday's candle, and we talked about how we have this trend, and it looks like we're going to break out to the upside of that. I bought right at the open on Monday, and was very happy that I did, obviously. Did not like this pullback. There was a really minor secondary offering here. I was surprised it pulled back this much. On a really minor secondary offering. It's only $15 million. I mean, that's nothing, right? And I think that's why we reversed so quickly. I actually should have bought more here. I should have added to the position down in here because I thought this is way overdone. I was concerned, though, that there was something I was missing. But recovered nicely on its way back up. And this one, if you're, I don't know. I don't know how you enter this, but if you really wanted to, or if you're watching it in the U.S., there is a over-the-counter stock, and the ticker on that is JRNGF. Okay, let's move on to our new setups, and we're going to start with JP Morgan. Remember XLF? I talked about XLF and that this looks ready to go. How we had that nice, ugly candle on Thursday that turned into a nice candle and a good reversal there. And we've got a level here to break through. And if we do break through this, it could go quickly up to the next level. All right, so take a look at JPM. So this is JP Morgan. Look what it's been doing. It has been consolidating for a couple of months now and getting tighter and tighter and tighter in here. And look at, we had that reversal candle on Thursday. Well, first of all, right, we came off the bottom of the range, and the range is really kind of defined by the 50-day moving average. We came off the bottom of the range and we came up to the top of that range, and we didn't fail, big time. But it did kind of fail there. It was putting in, 3 nice tight little candles. And if you'd been watching this, you would have been thinking, okay, yeah, these are nice tight candles. This is great. I'll play the breakout. I'll put the stop just below the lows of those 3 candles. Well, that, never happened. We came down on Thursday. Not as bad as the, financials ETF. But still, this is kind of, this got a little ugly there on Thursday, but we rebounded quite nicely again on Friday. We've got this big green candle here. I think this is ready to go. I don't like playing after a big move. I mean, this isn't that big a move. We're just under 2%. What's our ATR in this? So our ATR on this one is 1.73% a day. So this isn't going to go super quick. And this green candle here is really only 1 ATR, so that's fine, right? That's the average move we would expect. I would buy this breakout here, and this is not investment advice. This is what I'm going to do. I'm going to buy a breakout here, and I think I'm going to... because I think this can go for a while, I'm going to size such that I can put a stop just below those 3 lows. So that would look like, something like this, just below here. Just below those lows, and it's hard to see now, but this pink line, that's the 10-day moving average. It's a moving average I like to, I've really kind of tweaked this lately for using for stops. And that will start moving up from there. So initially, I'll be below those lows, and then I'll just trail this with a 10-day moving average, and maybe kind of slow that down a little bit, because I think this is, well, obviously this is really well behaved off the 50. If you want to be a longer term holder of this, if you wanted to say position trade this, you'd want to use your 50-day moving average. I'll probably end up using the 20-day moving average eventually on this if the position is working well. So that was JP Morgan, and that is if financials are working well. If semiconductors start working well, let's take a look at NVIDIA. Similar kind of price action to JP Morgan in a way, right? Now, it had this big gap up on earnings. It couldn't break through here, and then you had a little bit of a move down. You came right to the 10-day moving average, and you bounced off of that. All right, so I could play NVIDIA, and probably will. But there's some other names that you might want to play as well. So we'll look at that too. So I think it's pretty obvious what you need to do here in NVIDIA. A very similar setup, like I said, to JP Morgan. And, use that 10-day moving average as a stop to manage the position, or maybe even the 20-day moving average or this trend line, if you get to stay in this position for, a longer term swing trade. The other one you should look at if you're going to play this, and maybe you do half, a half size in each, is AMAT, Applied Materials, another semiconductor. And you can see the look at, this is in a level, and, it's been putting in higher lows and coming into it. So we've got this trend line that kind of actually broke through here, so we should adjust this trend line, bring this sort of more like that. But still, it didn't come through it much, and it's taken it right back. It's moving up. We've got the series of higher lows. We just need some highs here. So this looks ready to break through and move out to highs. And I wouldn't worry too much about this 125 level, this pivot high. I think it can quite easily get through that. Looking above that, the next major resistance is at 145. So I think there's, potential for a decent move in this. Yeah, I'm probably, if one's breaking out, I think both are breaking out. So I think I'm going to do a half size in each of these. In this one, because this one's a little choppier, I think I'm going to put a really tight leash on this. I want to see this really move. So I'm going to use a low of the day stop, or even an opening range stop. So I'll stop myself out below the low of the opening range. We'll show what that might look like in a sec here. Because if it goes, I think it really should go. All right, let's move on to this CABA. I have no idea what this is other than it's a biotech stock. And if you start looking around in biotechs, you will see a lot of stocks that look like this, that had a nice move up, sharp pullback, move up a little bit and go sideways. And making a nice tight little pattern in here and kind of riding, you know, on the 10-day moving average, or the this one is below its 21-day moving average, but a lot of them are riding on the 21-day moving average. You know what to do here, right? I mean, you know, this is a breakout play. Now, with this one being a risky little biotech stock, I would definitely use the opening range low as my stop. If I get stopped out, you know, so be it. I'm not going to be playing this big because it is biotech, but I do want to play it. It's got really, look at the ATR on this, 9%. You can get a nice juicy move out of this really quickly. So what does an opening range breakout look like? Let's take a look at Let's take a look at the intraday chart of this. Okay, so this is kind of messy here. Let's zoom into Friday's action. So let's say, and again, we're looking at a 5-minute chart here. I wonder if let's say this is gapping up or whatever this is doing on Monday. And if this, let's say our entry level is here. Let's say this was the high. Okay, it's not obviously, but let's say this is the high where we're going to play the breakout. We want to be in there on a break, say above $8.39. All right, so we're watching this and here we go. Okay, so this opened, it pulled down, it starts moving up, it breaks that high, and remember, this high would have been off the daily chart, right? It breaks through that high, great. So now we've got multiple time frames in alignment. We've got the break on the daily chart, we've got the break on the 5-minute chart, and even after the 5-minute chart, it kind of opened and pulled back and then started moving up. This is good. I like this, right? People are interested in this, and obviously they play that breakout. All right, so what I mean by opening range stop is, well, we look at this first 5-minute candle, or look at the first 15 minutes, whatever our low of that opening range is, we want our stop just below that. So that low is at $8.09, so we're going to put our stop at 808, 807, something like that. You may even look back to here and go, well, I want to be below those and widen it out a little bit. But like I said, if this is going to work, if the breakout is going to work, it should break out and just keep going. You know, and look, kind of like this did on Friday. Where you get that nice move and you don't lose momentum until a little later in the day. And look how even when this did lose momentum, it came down to VWAP and it found support there, and it found support there again, and then it went, started to grind up again. That's kind of what I'm looking at. And then for the following day, because you're looking at this intraday action and how well this supported here at VWAP, maybe this has some memory here. If you want a super tight stop, then maybe you put your stop just below that level the following day. I would be leaving mine below this low until the 10-day moving average catches up. We'll go back to the daily chart now. Okay, so we move up and away from here. I want my stop to be either that low of the entry day, but eventually I'm going to move my stop to this 10-day moving average, which will be moving up fairly quickly. And if we get up into this, 1280 level here, 1, 2, say 3 days up into that level, I'll be taking at least a third of my position off there on strength. But still wanting, still try and hold some with that 10-day moving average as a stop. So that's a really detailed idea of how you can play some of these riskier stocks. Just size accordingly, and on these breakout plays, don't stay in them if they don't work. They need to work out right away. You need to get momentum right away. And if the market isn't supporting you, or if the market regime changes and the stock starts rolling over, just get out. So here's another one, like the CABA, JSPR, Jasper Therapeutics. You can see quite similar, a better, longer sideways range. So I had a big move up here in January. I looked into this. This was, they had a drug that was, got orphan drug designation in Europe, which means they get to make a bunch of money out of the drug. So that was good for it. Big gap up on that. They've got some research going on, a lot of stuff going on in the pipe, and we haven't seen news out of that pipe for a little while, and which is why this has been grinding sideways. And this is, fairly typical with these biotechs. What happens next? And I think they already did the little offering. They did when they had this pop up, they did some share offering in here, so we don't have to worry about that right now. Hopefully, they could surprise us with another offering up in here. I hope they don't. I hope they surprise us with news. So you can see how this is tightening up nicely. The range on this is getting tighter and tighter and tighter in here. So there's a few different ways you can play. You could play for a breakout of the bigger range. So that would be an entry above these highs, and that level is going to be $2.04. You could play that Thursday high, or you could play the Friday high. Play just let me delete that. Play a breakout of that Friday high or the Thursday high. Front run this a little bit. And again, you'd want to do the same thing I just talked about. If you're going to play it that way, put your stop below the low of the opening range and maybe even trail it up intraday, because you might get failure at this level. Remember, if you're going in off of these two highs here, you're front running the entry of the real breakout, which is here at 204. So, maybe you can get in early and make some nice money before it even does the real breakout. And you can see, I think, that, when it does the real breakout, we haven't done a lot of volume up in here. Although you should actually look, you've got to look left. You got to look left on this because there is some overhead, but not a lot of volume in that area until you get up into $10. So, there's a lot of potential for this to run, especially if a drug gets approved or something like that. But you got to watch out for earnings that are coming up on the 17th. So under 2 weeks away for earnings. And you got to remember, this is a biotech, and something could go wrong, and it could just fall off a cliff. So play it small, respect your stops, and be careful in that puppy. Okay, here's another one that might be worthy of some fundamental research. So this one is in the auctions business. And I know from previous recessions and bear markets that the auction business is good in a recession, because this is terrible, but what happens is companies are going broke. And their assets are being liquidated. Machinery is being liquidated. Office equipment is being liquidated as these companies go through their bankruptcy process. And that is good for auction companies. That's when their business is doing the best because they've got a lot of goods to sell that they're getting really, really cheap because those goods are just being liquidated. And a lot of people are looking to, there are still, healthy companies out there that are using a recession as a time to expand and to buy cheap machinery, for pennies on the dollar. So that's why the auction business is good. That's why I want to do some more research into this and see if this is potentially a long-term play. I'm not saying it is. I know nothing about the fundamentals on this company right now. Because I just, I found this one this morning. I looked at this pattern and I thought this is a nice technical setup. So you can see that, we've had some ranges back in here last year. Broke down below that, but put in a really nice long basing pattern here and have moved up a way out of this base. Got into the bottom of that old range and found some resistance, but then gapped up through that resistance on earnings and are now putting in a bull flag. Now this bull flag has pulled all the way back to almost all the way back to the breakout level. And again, that 10-day moving average decided to bounce there. Couldn't break up through the top of this flag yet, but looks primed to break out of here on Monday. So if you think, you like the thesis on this company as a longer term play, well, you're probably going to buy here with a stop below this this support line at 1150. So say at 1140 or something like that. That's how, if you're wanting to play this long term, that's a good way to enter this. For me, I wouldn't have a stop any lower than the low of Friday, because I'm not sure if this is a long-term play for me or not. I think it might be, just from looking at the chart pattern on this. This looks like really healthy, and it looks like it got a nice healthy move on this one. So a lot of good plays. I don't know how I'm going to play all of these. There's a lot going on right now. And that's good. This is telling us that this is that change of character I talked about earlier in the video, and this is how this plays out, where we find lots of good setups and we go, there's almost too many for me to be able to handle. It's a good problem to have. Hopefully the market can follow through on this, because if it doesn't, things could get ugly fairly quickly, and these plays could all evaporate on us. So that's it. That is the market and our plays. I know this one went, this has gone quite long. I apologize. Thank you for hanging in. Let's take a look at what we got coming up. So for our members in the Discord, and remember, go take a look in the description down below and come join us in the Discord. As our members in the Discord, get to come and hang out for mentoring sessions. Coming up, we've got no ticker talk on Wednesday, but what I'm going to start to do on Wednesday, a little bit different. I am going to be doing a really quick little market update. So a condensed version of what we've done today. Going to try really hard to keep that under 15 minutes for you. So going to be doing that on Wednesday. I think we're going to shift around the ticker talks a little bit, and we'll start with, I'll be doing that market update separately and posting it separately from our ticker talks. So that's going to start on this coming Wednesday. And then a week from that will be our trading roundtable. And this is where just a bunch of us, get together on a Zoom call, and we just talk about whatever. And we pull up some charts, and we look at charts. We talk about entries and exits and stops and whatever people want to talk about. It's really cool. I really have a lot of fun at these sessions. People ask really good questions, and they all really enjoy it as well. So I really hope you can come join us at that. And the week after that, we get back into our Wednesday ticker talks. So that's everything I've got for you. If you've made it this far, you are a hero. Thanks for watching. Hit that like button, share, subscribe. If you've got any questions, anything we've covered, you've got anything to comment on, any questions, I'm keeping an eye on those comments, and I'm trying to answer the questions there as quickly as I can. So go ahead and comment down in there as well. Thanks, everybody, and enjoy the rest of your weekend.